You ever stop and think about what really happens in that split second after you hit buy on a stock? Well, today we're pulling back the curtain on the secret life of your trade. It's a hidden journey that actually splits off onto two very, very different paths. I mean, it seems so simple, right? You click buy and bam, the shares just appear in your account. But behind that single click, there's this whole complex world at work. Think of it like a fork in the road. Your trade gets sent down one of two totally different paths, and today we're going to explore both of them. So it all kicks off right here with your order. And from this one starting point, your trade can be handled in one of two really fundamental ways. Let's dive into the first one, the most direct path. Yeah, that one little click sets off a whole chain reaction. And believe it or not, every single trade falls into one of two main categories. And these categories, they determine everything. The speed, how complex the deal is, and even how your brokerage actually makes its money. So let's meet our two main players, the principal trade and the agency trade. Now, here's the thing. You don't get to pick which path your order takes, but your broker does have to tell you which one was used right there on your trade confirmation slip. So, what's the actual difference between these two? Let's break it all down. Okay, first up, let's talk about path number one, the principal trade. This one is the simplest and usually the fastest of the two. So what is a principal trade? Well, it's when your brokerage firm sells you shares directly from its own inventory. They're not going out and looking for someone to sell to you. No, they are the seller. Here's a really easy way to picture this. Think of your broker as a shopkeeper. Seriously. They have their own store, and they keep a big inventory of different stocks and bonds right there on the shelves, just waiting for a customer, like you, to walk in and buy them. The whole process is super simple and direct. You say, hey, I'd like 100 shares of this stock. Your broker just turns around, checks their backroom, their inventory, sees they've got it, and sells it to you right there on the spot. The big advantage here? Speed. Your trade gets done almost instantly. But wait a second. Besides a commission, how is your broker making money here? Well, it's all about something called the bid-ask spread. Let's say they buy a bunch of shares for their inventory at $10 a pop. That's the bid price. Then they turn around and sell those shares to you for, say, $10.02. That's the ask price. That tiny 2-cent difference? That's their profit. It's the fee you pay for the convenience of getting your shares instantly. All right, so that was the simple path. Now let's look at path number two, the agency trade. And if the principal trade was like a quick trip to the corner store, this one's more like a crosstown journey. With an agency trade, your broker doesn't have the shares you want in their inventory. So what do? They have to go out into the huge open market and find another investor who's willing to sell. They're literally acting as your agent, hunting down the other side of the trade for you. So if our principal broker was a shopkeeper, then the agency broker is more like a real estate agent. Think about it. They don't own the house you want to buy, right? Their job is to find the perfect house, connect you with the person selling it, and make sure the whole deal goes smoothly for both of you. Yeah, this process definitely has a few more moving parts. Your broker takes your order and sends it out to an exchange to find that match. Once a seller is found and you both agree on a price, the trade is executed. But that's not the end of the story, not even close. In fact, the real magic is just about to happen, all behind the scenes. And this is where we enter the market's grand central station, the back office where the truly critical work of clearing and settlement takes place. Okay, so let's think about this. You've agreed to buy the shares. Some stranger somewhere else has agreed to sell them. But how do the stocks and the money actually swap hands? I mean, you're probably with totally different brokerages, maybe thousands of miles apart. How does that work? Well, this is where the DTCC comes in. That stands for the Depository Trust Clearing Corporation. The easiest way to think of it is as the central, super trusted hub for the entire U.S. stock market. It's the one institution that makes absolutely sure your money gets to the seller and their shares get to you, safely, accurately, every single time. Now, you might think this happens instantly, but it doesn't. The whole process usually takes 2 business days to officially settle. You'll hear people call this T+2 settlement. So if your trade happens on a Monday, the actual cash and stocks don't officially change hands until Wednesday. So what does the DTCC actually do? Well, it has 3 main jobs. First, it matches up all the buy and sell orders between the different firms to make sure all the numbers are right. Second, it basically acts as the air traffic controller for the massive transfer of money and securities. And finally, and this is so important, it guarantees the trade. That means if one side flakes out and doesn't deliver, the DTCC steps in to make sure the other person is still whole. It's the ultimate safety net for the entire market. Okay, so we've gone pretty deep into the weeds here, right? We've looked at the two paths your trade can take and the giant system that makes it all happen. But let's bring it back. What does any of this actually mean for you as an investor? Why should you care? Let's do a quick side-by-side. A principal trade, that's your broker acting like a shopkeeper. It's fast, it's direct, and the shares come right from their own inventory. Then you have the agency trade. That's your broker as a real estate agent. They have to go search the whole market for you, which is a much more complex process that depends on that big central clearing system to get done. At the end of the day, understanding all of this isn't about finding some secret trick to make more money. It's really about appreciating the incredible, almost invisible system that holds up our entire financial market. It's this amazing engine built on trust and efficiency that lets millions and millions of us trade with each other every single day, and to do it with confidence. So I guess the real question is, the next time you go to click that buy button, will you see it the same way? Because now you know the secret life of your trade. It's so much more than just a click. It's you plugging into this vast, complex, and honestly kind of beautiful machine that is the modern stock market.